Right guys, welcome to this session with me, of course, Ross-rfx. In this session, we are going to be talking about the two liquidity schematics that we've been following over the last 3 weeks. We're going to go in depth in how you are going to use these, and we're also going to talk about some of the exceptions and some of the, points to avoid, if you were, when it comes to looking at these overall scenarios. Now, of course, like every single trade setup there is, you're going to have failures and you're going to have successful trades. Massively outweighing the losing trades are our winning trades, and generally the risk reward is 4 RR and up. So there's a lot of potential for these trades. Also, it falls in line perfectly with what we look at and what we follow when it comes to our swing to swing trading. So let's get into the first schematic here. Now this schematic is what we would call a scenario. So not double A, it's just an A scenario, okay? Now the reason we call it A is because it lines up with our swing range a lot better than the B scenario does. Now, of course, we will go into the detail of both of these, but first we're going to cover A. So we have to have a pre-established swing range. Now, of course, if you are watching this video, you should already be able to depict swing highs, swing lows, and define swing ranges within the market. Again, if you don't know how to do that, then check out the manipulation points and swing points videos that we've uploaded to our YouTube. And of course, if you don't understand those videos, then you need to go back to the 5-minute order flow, which is the raw foundation of this entire system. Okay, so assuming that everyone that is still here at this video understands how to define swing highs and swing lows, now we can commence with this entry model description. Now, as I stated earlier, the reason we've called this scenario A is because it lines up with our swing range a lot better. And overall, we are looking for liquidity shifts, but we are, instead of focusing on the internal liquidity, we're watching price react from the external liquidity and the external points of our swing ranges, okay? So in this case, it is a bullish scenario. Now, all of the rules that we cover here in this A scenario would have to be, of course, reversed if you're looking at a sell range. Okay, the rules are going to remain the same, but obviously a sell range, we'd be looking at a high rather than looking at a low and so on. So straight away, you can probably see that we have a couple of price labels here. So we have the first label being here, which is price sweeps out the swing low but does not BOS. Now this is a very key point. We have had scenarios in the past where we will sweep the swing low and we will have an SP, which again we will go into detail what these points are and show you some live examples and so on and so forth. But we need to make sure that this break of structure does not occur. Now if we sweep this, we find our SP, and then after say 5 or 10 minutes we actually have 2 candle closes out below this low. You should know now, if you can track and follow swing ranges properly, that 2 full candle closes means that that is a break of structure. So if we were bullish, we in turn would become bearish. So the SP setup aiming for the previous high is no longer valid. Okay, so we just have to make sure we state that. We have to make sure that price does not close outside of the swing low. It can only be a liquidation. So that would be either partial candle closes outside, 1 candle close or less, or purely wicking outside of the range. Okay, so once we have established that, we can then look to the 1 minute high that has caused that liquidity sweep to occur. So an easy way to define the high without being confused and getting stuck is to hit the rewind button, rewind it to before we swept the low, get down onto 1 minute, fast forward and find the exact point that is liquidated and then find the high responsible for that, okay? The same way you would with 5-minute highs and lows to find your 5-minute ranges. You're doing the same thing, but you're finding one 1-minute high that has caused the sweep of this major point. Okay. Now, once you have done this, that has confirmed the possibility for a scenario A in this case, okay? So of course, until we close outside of this bullish range, our bias remains the same. The swing high is the target and the swing low is the area of invalidation. Now, of course, we have swept this swing low now, so we have to adjust our stop loss to allow for the next low point. So we want to put our stop loss below the liquidity sweep, okay? Now, of course, the entry is not confirmed and we don't have to worry about our stop loss or our entry until we actually confirm the entry. So how are we confirming the entry to this A scenario here? So what we need to be seeing to confirm this entry is we need to see price push heavily up through the SP. Now, we do not need to see a structural close. We do not need to see X amount of candles close above this point. All we need to see is that price point met. So whether it's met by 1 pip or met by 100 pips, the only time this SP is going to change is if we hit another liquid point. Again, in this scenario, we're not going to be talking about that, but we will go into that in the ranged liquidity lesson that we will be releasing. So, based off of what we've spoke about, we've seen a range established. We've seen price come down and sweep the, in this case, lower end of the range without closing out. We've then seen price push back up, taking the SP. The elements we need to see when this SP is taken is the following. So if you haven't already started taking notes, guys, I highly recommend you to take notes because this, again, is a very efficient entry model. And if you are trading the system that we have taken the time to explain to you and show you, then you'll be missing out if you weren't to apply this. So we need to see, again, from base to point of contact of the SP, we need to see impulsiveness. Okay, so we need to see volume, we need to see unmitigated price action, and we need to see imbalance. Now, ideally, we'd like to see all three of these, but sometimes you will see that it is only one element. So, for example, there may only be imbalance. There may not be high volume. There may not be unmitigated order blocks. Generally, there will be unmitigated order blocks if we have imbalance. You guys know this. But the magical mixture for this to be the most efficient is all three of them collectively. Again, like I say, don't worry too much if you can't have all three together. If the move is impulsive and it has clear bullish directional movement, again, if you were looking at a sell range, it would need to have bearish directional movement, like I stated earlier, reversal. As that stands, if you have those elements there when the SP is taken, we need to look for the last downward shift before the up move. Now, in some cases, it is a huge area. In other cases, it's a tiny area, but it's going to really need you to pay attention to where has the impulsiveness come from. Now, if I was you, I would aim for the average area rather than the extreme low or the extreme high. So, for example, let's say there was an extreme area here right at the SP, and there was an extreme area here, and then there's also an area in the middle. I would highlight the middle because it's the medium of the three, for example. Now, if you only have one, and let's say it's this whole down move for the upshift, then you'll simply look for price to pull away, and when it pulls back into this area, you will buy it. Now, of course, where the entry area is going to change what the RR is, depending on one, how large these SP moves are, how large your stop loss is, obviously where the liquidation is, how large the order block is, how far away your swing high is, or how large your swing range is. But collectively, once you have seen this movement come up and give you impulsiveness, imbalance, unmitigated order blocks, you can then highlight this area and set an order or manually wait for it to come back to this area. Okay. Now, of course, I recommend you to go away and test both of these scenarios before executing any live trades based off of them. But I can tell you now with confidence that if you go and backtest this, you will see some amazing results. So that covers scenario a directional movement playing away from our lowest point within the range without breaking structure, overall sweeping the swing low structure to then follow over to take the structure that is at the swing high. So scenario B. Scenario B is slightly different, but it holds the same overall principles. Now, scenario B is slightly different because what we are looking at here is, again, a pre-established swing range. Okay, but in this case, instead of price pushing down into our range, we establish our swing high and then we push the swing high and we do not close out above it. We only liquidate. Okay, now it is key that you don't jump in with 2 feet and you say, oh, we've liquidated the swing high, when in reality we hadn't created the swing high before this sweep. It's something that you need to pay attention to. Again, that will come down to if you are consistent at tracking swing ranges and manipulation points. That is going to be the defining factor, is whether you are going to be able to deploy this system successfully and consistently, which I believe most of you are. And like I say, if you haven't, check out the videos in the description because they are essential to your learning and growth within this system. So let's start off with our B scenario with the first sign that we are going to find this scenario. So we have a pre-established swing range with a swing high and a swing low. Price comes up and it sweeps. Price sweeps the swing high but does not BOS. Again, a very clear point. We have to assure that this does not BOS. Sweeping once and then going, oh, we'll trade it from here, not tracking it, and it closes out twice from here, means you are more likely, if price does pull back down to your area of entry, you're going to get liquidated because the bias would have been changed by then, okay? Now, once we have established a sweep of the swing high in a bullish scenario, we need to then track back to the last point of high liquidity within the range, okay? Now, there's 2 different points that we need to make here. Number 1 being that generally it will not be the low that has caused the sweep. Not always, but generally it won't be. And this is because it's normally a new low, therefore a short-term representation of price action, rather than a pre-established low within the creation of the swing range itself. So the swing range itself will have major highs and lows within it, pre-established swing high. Okay? Anything else is internal price action, and we know this. So what are we looking for when it comes to our last major liquid low? So realistically, what we're looking for is a low, in this case, that has swept out previous lows and caused a break of structure. Okay? So we need to see it sweeping previous lows. Again, we'd prefer these lows to be the lows that are responsible for creating a new high, for example, because then they hold higher levels of liquid. And then when we push up and we break that structural high, we know that we've only swept at this point and that this low holds value for us. So if we're lucky enough to get a liquidation and price push back down to the point that we want to see, we are going to do the same thing. We're going to rewind price and find the 1 minute high that has caused this low to be liquidated. At that point, we're going to label it SP. We are going to wait for that SP to be taken. And if the SP is taken with the characteristics that we spoke about earlier, volume, impulsiveness, non-mitigated price action, and imbalances and fair value gaps, then we can highlight the last downwards move before the SP being taken, and we can look for an entry. Now in this case, we would look to put our stop loss below the liquidation low. Again, this is going to change slightly depending on where this entry is given, because the closer you get to the swing low, the more probable it is that you may visit that point. So you may want to use the swing low as protection. But overall, the same principles apply and the same target is going to be applied. Now you can see that we are actually targeting the liquidation point itself. We target the point of highest movement within this range. So if we haven't broken structure, we're going to target that wick that's pushed above our swing high. So let's cover the key points here. We need to see a clear sweep of the swing high without a break of structure. We are then looking for price to pull back to the highest point or the highest low, for example, of pre-existing liquidity within the range. So it needs to be created during the swing range movement itself, not once the swing range movement has been created. Now there are again going to be scenarios where the liquid is created after the swing high, but generally it is hard to do that because we are looking for a low that has caused a break of structure. And for a low to have caused a break of structure, it will need to break the external structure points. Otherwise it is internal price action, right? So we need to make sure that we are looking for that principle. Now, a couple of things that we haven't covered so far. Number one, what does SP mean? Well, SP is shift point, okay? Now, a shift point essentially is the last high liquid point on a 1 minute chart prior to a higher time frame liquidity area being secured. So in other words, if we take out that liquid, it becomes highly probable if the characteristics follow that movement that we can then shift our direction and continue in the direction that the SP was swept in. So, as I said earlier, we are going to show you some live examples now down on the charts, and we'll give you a nice overview of some of the setups that have appeared already this week, and we're only on Tuesday. So, let's drop down to the live price charts and we will find exactly what we need to see. Right guys, so we are down here on the GU chart. Now this setup was delivered to us yesterday, so Monday the 20th of November. So you can see this red line right here with the target on, that is our swing high. Okay, so if we look at what we have done here, we have essentially have swept out the high, okay, and we have established that price could offer a B scenario. Again, we called this out to the community whilst it was playing out. I believe that we were on a live. Again, regardless of that, we caused a sweep of the swing high and we marked up that this could be a B schematic. Okay. Now, remember what I said earlier. A lot of the time, if we are looking at a B scenario, so let's just pull the B scenario back up so you know exactly what you're looking at. So we are looking for what exactly? Well, we're looking for a sweep of a pre-existing swing high. Once the swing high is in, what did we say? We said a lot of the time it is not the low that causes the sweep, but it is the pre-established liquidity point prior to that. Now, this gold range was absolutely ginormous. So we didn't have a pre-existing low within this range, but we did have a low that wasn't the low that caused the sweep. It was in fact an internal swing point which we knew held liquid. Why? Well, we know that 1, it is responsible for this whole move within London. 2, it has taken out many internal lows within the Asia range here, and overall it is a wick that has swept all of the structures close to it. So we can then use that as a high liquid point. Okay. So we waited for price to close out, make sure it didn't close above. It came down. Notice how we haven't highlighted this low because it's not the high liquid low. The high liquid lows are the same points that we want to look at as our swing structures, just internal. Okay. So we can see that we took this out. So let's rewind this and you'll see exactly what we did here. Okay, so we swept this out. So let's go down to the 1 minute. So notice how we swept this low And at this point, we track back to find the 1 minute high. There's no high here, no high here, no high here, no high, no high, and then here's our high. Now you can see by that beautiful illustration there that there is liquidity here, because again, as I covered earlier, it is the last area that holds high liquid before this area of high liquid is swept, right? So if we now see this SP taken with momentum, impulsiveness, volume, and so on, then we can look for an area to enter this trade. So let's play this here and you'll see exactly what happens. Now price skims the SP here. Now you'll notice a lot when you start applying this, and if you have 5 minute order flow understanding and you can track swing points efficiently, you're going to start to notice that these SP points will not get touched until price is ready to touch it. Okay, when it does, the entry a lot of the time is offered very, very cleanly. Now, there are going to be scenarios where that is not the case and you will tap the area and it will go to your stop loss. Again, that's part of trading on the lower time frames. So from here, we're still waiting for this. This was not a swing low, by the way, at the time, because we're internal. It is now a swing low because we've broken out of that range. But in this case, we're just going to, brush over that. So we're still looking for price to sweep the high, right? And when it does, we're going to look at the characteristics. Now, we should probably delete this because we're kind of giving it away a little bit. And we'll play this right here. Okay, so straight away, this move that has taken that out, is it impulsive? Yes. Okay. Is there high volumes? Higher than there has been on the previous structures created, or not the highest, but higher than there has been. There's some real nice buy volume within here. Is there unmitigated order blocks? Yes, there is. Is there a downshift before the up move? Yes, there is. So you can clearly see this is the last downshift before the up move that took this out. Again, this area right here, that's pre-mitigated by the move that moved straight down. We are looking for an unmitigated area that price can revisit. Okay. So at this point, we have a valid setup now. The setup being entry point at this POI, stop loss under here. Now there of course are going to be other elements you're going to have to apply, which again we would have covered and we will cover in our other videos, like retail traps and understanding liquidity and all of the smaller but very much important lessons and videos that we have posted. Now right here, you can, anyone that's reasonably advanced or reasonably independent when it comes to analyzing will probably have looked at this and said, well, this looks kind of rich in liquidity. Now you can take that into consideration when you're trading, and you should take that into consideration when you're trading, but for this example we are simply going to ignore that because we are only worried about the liquidation low and the entry point and then the target. Okay, but of course you can use these liquid points the same way we've spoke about before within our swing ranges. So you can, let's say, pick the lowest point of liquidity and then place your order just above that, knowing by probability that this will want to be swept. Of course, you reduce the probability of the trade actually tapping in, even though the probability of it being swept is still reasonably high. When you refine your order, you know that price can miss that order. Okay, so enough of that anyway. Right now we have the scenario and we can aim for the swing high or for the high that has swept the swing high itself. Okay, so at this point all there is left to do is make sure that we're not clashing with news, make sure there is no outside effects that are going to cause any sudden movements, and we can just let this play and aim for our swing high. So we've been tapped in. Again, no real impulsive movements yet. Couple of impulsive moves. Also building a lot of liquidity down here, and you can see here that we come down and we grab that liquidity. Price then respects the setup and we shift beautifully bullish. Again, I will delete this for now. And we have nothing more than a very nice bullish push through the rest of the day, taking us up to our final target. and completing the B scenario right here. Now that we've walked you through this scenario and we've shown you the way that we're looking at it and we've managed it, what we'll do is we will flick to a couple of other B scenarios that have happened from last week. We won't walk you through them, but we will just snapshot them. So I'll edit this video up. So in the next couple of seconds, you will see each setup pop up onto your screen. So here's your first scenario here on NAS 100. You can see that we had a pre-established swing high. We swept that swing high. We come down, take out the liquidity here, and we sweep, and then we run to the bullish high. Now in this case, we did have some invalid entries, but overall the schematic has worked out perfectly. So here's another example right here on gold, and this was from the 15th, which was last week. This one's a little bit more complex, but again, it is completely the same as the other B schematics. It just goes on over a longer period of time. So we had a pre-established swing high. We swept that swing high. We then had multiple lows within here, which made up our high liquid low. We found the SP that caused that to be swept. We waited for that SP to be taken, as we did not liquidate any other high value lows, so the SP remains the same. We took the SP, we found our last downshift before the up move, we tapped in, and we ran the swing high. Final example here for the B scenario. This actually happened on the 17th as well. So we had a pre-established swing high, we liquidated the swing high. You can see we have some lows within here. Again, we have market close, but we have a true low of liquidity, which is right here. We found the SP, waited for the SP to be taken, found our area of entry and aimed for our swing high. In this case, we didn't get tapped in and we didn't reach our target, unfortunately, but that's part of trading. You guys know this, and just the same way that these scenarios aren't going to pop up every single day, they're not going to work every single time. So let's get down onto A scenario examples, and then we'll be wrapping this video up leading into the next video for you guys. So just to the right of the last scenario you saw, so scenario B, within the same swing range, you have seen a scenario A. Now scenario A, to jog your memory, is the run of a low within a bullish range, or the run of a high within a bearish range. Okay, so you can see here we swept out the low, we found the SP, we took it, we found our entry point, stopped below the low, and we aim for the swing high. Now in this case, we only hit our partial target levels. We didn't hit the overall target, but it still offered a very nice 1 to 7 or 1 to 8, depending on how you partialed, or if you partialed at all, before it reversed and gave a different scenario. So a very nice example of an A scenario there. Okay, so this is a scenario here, scenario A. Let's mark this up so you guys can see it. Okay, so this is a scenario A, and this is a sweep of the swing low leading into the swing high. Now it's very hard to see, but right down here on the 1 minute there's an SP in here. We took the SP and then we looked to go long from here. Now unfortunately in this case we didn't pull back far enough, but news came in shortly after, which you can see actually would have invalidated the trade anyway, so there was a reason that we weren't in it. But this, again, the same scenario marked up and played out very nicely. So this scenario here is slightly different, but it's exactly the same principle. Now the reason I say it's slightly different is because we were playing within a short-term swing high and a short-term swing low, but nevertheless we swept that swing low. In other words, the range was bullish. Okay, and we found our 1 minute SP, we found our entry point, and some of our members actually took this and we were able to trade it to the external point of the swing high, which actually gave us a 1 to 17. So again, some really nice potential for these trades if you pick them up in the right areas. This scenario, like here, like I explained to you guys earlier, swept the high, and then that scenario led us into continuations further on. Do we have any on NAS 100? I can't even remember if we do. don't think we even get any A scenarios, do we? Was there one on UJ? I think it was UJ. Get rid of this. Oh, this is so slow. Come on. Freaking. It's like tortoise. That's a B, not an A. Okay, no, not on there. Ooh, where was it? I can't remember. I think that's it. Touched it from here. So hopefully that has helped you guys understand the principles between the A and the B scenario. Remember, if you are slightly confused and you still don't understand fully, grab a notepad, rewind back to the point where we were walking you through the criteria for these entry points, and then begin to work your way through on your own charts. Now, going into the next session, we're going to be talking about liquidity within these ranges as a collective. So highs that are worth value, the external liquidity points, how you can begin to negotiate these ranges and applying these models within the parameters that you already have established due to the way that you're reading order flow, which is, of course, tracking the manipulation points and swings. So guys, if you have enjoyed this video, make sure you hit that like button, make sure you hit that sub button, and I'll catch you all in the next one.